Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
We've been getting a ton of questions about this CARES Act, how it relates to you and your business, particularly how does it relate to real estate investors and the real small business. We did a live Q&A session with the CPA firm on April 10th. The information was so good, we decided to roll it into a podcast. Enjoy this episode. Welcome everyone to our live Q&A on the CARE Act and how this is going to relate to you. We brought in some special guests here, as in plural, and this is Campbell Jones and
Cohen, don't mess up the name. Okay?
And Cohen.
You get the name right, okay?
Just let everybody know what my social life is like. I hang out with a ton of CPAs, right? And as far as the CPA firms that I have seen that are putting out some content in regards to all these changes, these guys have by far been doing the most. In fact, they've been doing live Q&As on Saturday mornings at 10 a.m., which has been some great content. So I'm going to turn this over to you guys. Do you guys want to maybe briefly introduce yourself before we start diving into some of these questions?
Sure.
I'm Gary Campbell. I'm a partner at Campbell Jones Cohen CPAs. And these are my partners. I'll let them each introduce themselves.
Hi, I'm Lisa Jones.
Jack Cohen.
Casey. Beth Mercier.
Perfect. Awesome. Before we jump into it, we had asked for some questions beforehand. So we do have a list of questions. If anybody who's on the live webinar has an additional question, which you're going to see at the bottom of the Zoom menu, there is a Q&A section. Please put any questions in there because that'll help us monitor which questions need to be answered. But if you want to chat or say cheers or share some information, please use the chat box. What we found with a lot of our listeners is if they have a small business, but even like maybe a larger small business, a lot of them have already been gotten connected and have maybe applied for some of these benefits. But what we found is some of the truly smaller businesses, the smaller entrepreneurs, the landlords, the people who are self-employed, a lot of them don't have the capacity or the systems to keep them in touch with all these changes. So a lot of what we're going to talk about is going to be catered to them. Now, Campbell Jones has put some amazing content out. So if you have questions in regards, some more in-depth questions about these SBA loans, we encourage you to start following these guys. They are doing a more in-depth Q&A at 2 o'clock. Pacific time. So right after this, you can grab some more coffee and then hop on to their webinar. Also in the chat box is a link to their website. In there, you will be able to find recordings of some of their other webinars.
Hey, Anthony.
Yeah.
First of all, I think people will need a lot of coffee to survive this. That's number one. And also on our website too, pretty much all the documents that we've been able to gather as we go along are on the website as well. For example, I think we actually have the application for the payroll loan on there. So there's not just prior videos they can pick up on, but we have a lot of any press announcements, I think, with the IRS issues we put on there. So we'd like to think it's fairly up to date, although there have been some new announcements today, which probably haven't been posted.
Awesome. And real quick, it's always tough. This is a typical podcast for us. It's always tough to get a word in edgewise with Anthony here. But I'm Cameron Christensen. Great to meet you guys.
My bad.
And what I'm going to be doing mainly is I'm jumping back and forth between the chat box and the Q&A. And so I've also got the list of questions that we have gotten throughout the week. So I'll be jumping in here and making sure we get our listeners' questions answered. So stay tuned.
So first, can you guys maybe give us paint a broad picture of, we're hearing a couple different things. There's a Payment Protection Act. There's these additional loans. Do you mind just briefly kind of overviewing those, and then we'll dive into some more detailed questions?
So basically the SBA, there are two products from the SBA that really is kind of what everyone's concerned about right now. The first one is called an EIDL loan, or an SBA disaster loan for economic injury. That came out, I think, 3 weeks ago now, that people were able to go directly to the SBA website and apply for that loan. It was a real loan, so it was something you were applying for. You had to repay it. The attractive feature of it was that one of the things in the law was that there was supposed to be a $10,000 grant that you would get whether you were approved or denied for it, that wouldn't have to be repaid. Additionally, in the law, it said they were supposed to fund that within 72 hours. So there was a lot of excitement over that. Everyone went and applied. To our knowledge, no one we know has received that. We're now 3 weeks in on it. I had a client forward me an article today, I think from the New York Times, just tons of frustration over this, that people thought they would have money by now. Are they even going to get money? All kinds of rumors out there about, are they really getting the 10,000 if they get anything? Then maybe it's based on number of employees, 1,000 per employee. I heard something about they're all getting capped, never mind the 2 million, they're getting capped at 15,000. So we're hearing all different kinds of things. They're going to run out of funding. We think maybe they'll put more into it. We're still generally, like our firm, what we're telling people is, we don't know, go apply and get yourself in line. We're not guaranteeing you're going to get it, but hopefully some money will start coming out of that. The second loan is called the PPP, which I can't go anywhere without hearing about that these days. Even like when I open Facebook, like Small Business Administration says apply for your PPP loan. That is for small business owners to cover payroll. For 8 weeks of payroll, they apply through their lender. We are actually starting to see some of those get funded today. They opened up applications last Friday. We've helped a lot of clients with that. Only a handful have gotten some money. We make them show us when they say that. We're like, I want to see a picture of your bank, because there's so much talk and there's so much rumor. So when they call and say something, I say, show me your bank account. I want to actually see it in there, because we want to give people some hope that it's going to start flowing. So that program is starting to happen. It's different bank by bank. They're requiring different things, but we've been really busy this week helping people try to get that money. So those are the two big programs that we're working with our clients on right now. And there's other things, expanded family medical leave, enhanced unemployment benefits, all of that we can talk about. But those are kind of the two big loan programs that.
Lisa, so you'd mentioned that $10,000 grant through the SBA, and there's this PPP. Are those two separate?
Yes.
Fine.
However.
That's fine.
Yes, but if you get the they're two separate things. You apply separately. However, if you get the $10,000 advance grant on the EIDL loan, it reduces the amount that you would get on the PPP loan. So if you qualify for a $250,000 PPP loan and you were to get this $10,000, you're only going to get $240,000 because you've already gotten 10. They treat it as an advance against that. So far, we haven't had to worry about that because no one's gotten the 10,000, but that's the way it's structured to work.
Okay, perfect. Is that all the programs?
Well, the only other thing that is going back, there's actually more. But,
those are the two loan programs.
Right.
Yeah.
And starting today, I believe the PPP opened up for self-employed people, correct?
Yes.
Yeah.
Right. So last Friday, they claimed they started taking applications if you were a corporation, but today, they're supposedly going to start to take applications if you're a sole proprietor, because a sole proprietor is also eligible for both loans.
But there's been somewhat of a disconnect between what the government is telling us when you can apply for these things and when the banks are not ready.
Right.
So even last Friday, we went through, they say it's opening up, the program's up. Half of the banks weren't taking applications. I think even today, I checked, US Bank is still only accepting business owners with one owner, not self-employed, but so they're all different. There's all different criteria on it. So I haven't gone on any websites today to look, but I'll be curious to see
Right.
how many self-employed people can actually get their application.
And I think that to follow up, and I think this is important, the application itself is an SBA application, which is the same. It's just that the banks have their own rules, and that seems to be the
To
problem.
get it fast.
So like when I'm talking to new clients, one of the things I'm asking them, well, who's your bank? Because it's possible maybe we've already submitted something to that bank and we already know ahead of
We know
time
what
the
they
stuff they
want.
want. But like I had one today and the guy had a small bank somewhere in Ohio, and I couldn't even tell if it was an approved SBA lender because the bank has to be an approved SBA lender or they can't process the loan.
And I think I neglected when we were talking about the PPP to tell you why this is so attractive though to business owners. It's a forgivable loan. So when you apply like you're getting a loan through the bank, they fund it, you actually sign loan docs. However, if you use that money for payroll, rent, utilities, it can be forgiven at the end of the 8-week period, which that's why it's so attractive, that it essentially is a loan that will turn into a grant.
Okay, so in regards to the PPP loan, which is a payment protection program, can you share what is included in that calculation?
In other words, the calculation is to how we determine how much you're eligible for to borrow.
Correct.
I can do that. What's included, it's based on 2019. The information I'm going to give to you right now is assuming you've been in business for 2019. There's a little bit of caveats, a little bit of different rules if you weren't in business for the whole year of 2019. However, if you were in business for all of 19, you're going to take your gross wages, which is for all of your gross wages. A lot of people I had some clients trying to pull their W-2s and saying, okay, I'm just going to take box 1 off of this W-2 or my W-3. That may not be your gross wages if you have other deductions and things that wouldn't be on there. So we're payroll companies like ADP, Paychecks, they have created special reports for you to pull that kind of spells out everything that you need that they're aware of. They're called CARES Act reports. When you log in, they're pretty obvious right in your login screen. But you're going to start with your gross wages. You're going to add to that any health insurance that you've paid, any group health insurance that you've paid on your employees. Obviously reduce it by anything you've withheld if you have an employee sponsor where your employees pay in as well. You're going to add to that retirement benefits. Again, people are trying to pull, some of my clients are trying to pull their payroll reports and they're taking the employee contribution. We're all only talking about employer contributions to these things. So health insurance paid by the employer, retirement plans paid by the employer. This is too many P's.
This is I can't believe
this. And then you're also going to be able to add in state taxes, and only state unemployment taxes or taxes related that employers pay on behalf of the employees. No withholding, and I'm running into that too, trying to tell people pull that back out, pull that back out. Once you get all of that, you want to check one more time. You can only put into this calculation the first $100,000 of a person's gross wages. So if you have your higher compensated employees or owners, business owners, managers, it's only up to the first 100,000. Once you get all of that put together, you're going to take a monthly average, so divide it by 12, and then multiply it by 2.5. And that is basically the loan that you're asking for. And I had some people come back to me this week when we were doing these calculations and like, oh, well, that's not very much. You know, it's like $8,000, $12,000. And I think what people are getting confused on, like Lisa had mentioned earlier, this loan is designed to cover you for 8 weeks of payroll and those other fixed assets like your rent and your utilities or fixed expenses. This isn't a loan to get you through the rest of the year. This is to help us through these next 8 weeks that we think are going to be the most critical, and hopefully we'll start rebuilding after that.
Now, are you able to include payroll processing fees?
We've run into a few things that are kind of tricky. We were thinking you should be able to. We also thought, because it said payroll and payroll related costs, so we kind of threw around the idea of workers' compensation insurance, because you absolutely have to have that when you have employees. However, when the banks are sending, because we have a calculation that we're kind of throwing out based on the information that we have, some of the banks are coming back and there's just not a spot to put it. And so I've been kind of trying to deal with some of the bankers directly, putting it in there, because I do think it's a cost of having a payroll. putting it in there and then let the bank come back and take it out. I'd rather do a little bit more and then have them come back and go, no, we're not gonna do that, than not do enough and leave a little bit of loan on the table. And I think one of the hard things is we've got limited guidance from the SBA on this. So on all of this stuff, like even I was talking to a banker this morning, typically on an SBA loan, they want to get transcripts of your tax returns. They're kind of being held up on that, but yet the IRS is pretty much closed. You're not going to be able to pull transcripts on it. So things that would be normal are not. So banks have their own criteria. We're getting limited guidance from the SBA. So it's really kind of, we're all just trying to figure it out.
And going back to the payroll costs, for most small companies, payroll costs are probably what, $100 a month or something? So you're talking about, for 2.5 times, you're talking about an additional $250. I mean, it would seem kind of foolish to hold your loan up for thousands and thousands for $250.
And I think what we've run into a few where people feel really strongly that should be included, we say, put it in there and see if your bank lets it go through. We'll see on the other side of it, because we haven't really gotten anything that says either way, yes or no on it, so.
Also, to go back to what Beth said too, which I think is important, this PPP loan is only intended to help you short term. Really, if your business is in trouble and you need a lot of money, then you really got to go back to the idle loan, because that's again like a real loan, but could give you up to what? I think it's up to $2 million, I believe.
That is up to $2 million, and they're supposed to look at your expenses for 6-month periods, so,
Right.
or 12-month period.
Well, right. So again, short term, this is a great deal. There's no question. The payroll loan. But if you're a business that's really struggling, I'm not saying you don't take the money under the payroll loan, but the truth is, after that 8 weeks is up, if your business is still down, you're going to need more money, or you're going to be going out of business. So that's why we say you got to do both.
Right.
Okay, so I just want to clarify, let's say somebody has an S Corp and their only employee is themselves. Do they qualify for the PPP?
Yes.
Yeah.
Okay, and then it's
But they have to be on real payroll. That's another issue.
Right, we run that issue quite a bit.
How many people who have sub S's refuse to actually put themselves on payroll, and they want to count distributions, or they 1099 themselves? It doesn't count. You actually have to get a W-2.
W-2.
so if someone doesn't have an S Corp and they're just 1099, so they're filling out Schedule C. So now do those guys qualify for the PPP?
Yeah,
Yeah.
and that's the ones that are supposed to be opening up today, April 10th. We don't have much guidance as to what banks are doing with that. They really haven't said too much, but technically, yes.
But the interesting part about that is some of those people, when we actually are starting to look at actual client scenarios and kind of running it, depending on how much money they make. So if you have a Schedule C making $20,000, I think Beth will probably talk a little bit about the expanded unemployment. You might be better off just going on unemployment, because they're going to cover self-employed people now. You could potentially get up to $1,000 a month. It's going to be more than you're going to get out of a PPP, and you can get it for 13 weeks. So you really, a week. You really got to look at everything out there and see what's best for you. It's really individualized depending how your numbers are and how you're set up. It's not straightforward.
So even going back to your example, if you're self-employed and you made $20,000 a year, if you do the math on that, your payroll loan ain't gonna be very much.
No, you're better off going on.
You're better off
unemployment.
actually going on unemployment.
Yeah. And actually,
I think
unemployment
you
now
can
you
do
get
both,
with,
can you? I mean,
You could still.
do the one and go on unemployment later.
Yeah,
yeah, you can't double dip at the same time.
Right,
Yeah.
but you could do the loan and get
yeah.
whatever the 8 weeks that you qualify for, and then
Then go to
go on unemployment.
So-
and get
so think how-
at least the 600.
But think how crazy all this is. All the guidance based on these loans is totally counterintuitive. All the stuff we used to tell people wanted to do before. Nobody wanted to report a lot of income as a sole proprietor. Guess that works against you now. Nobody wanted to go on payroll, because we told them if you're a sub S, keep your payroll as low as possible for yourself. Well, now apparently it works against you. Go figure.
Right.
So,
Hey, real quick, I'm going to jump in here, and just as a reminder to some of our listeners, if you guys want to have a conversation, if you could post that into the chat box. We'll reserve the Q&A section for very specific questions. And Lisa, I'm going to throw this one over to you. I think you touched on it a minute ago, but it is very specific, so I want to make sure we get it addressed. It says, I have a question about the SBA PPP loan and the forgiveness piece. How does the forgiveness work if we don't have payroll? I was reading that only 25% is forgivable. Is that true? Can we get 100% forgiveness?
Well, I guess a couple different things. So the whole idea of the PPP is to keep your people on payroll. So if you have 10 employees at the beginning of the period, in order to get it forgiven, you have to have 10 employees at the end of the period. It's not an all or nothing. If you now only have 5, you may only have half of it that's forgivable. I think what they're referring to on the 25% of it is, like if you got a $100,000 PPP loan, 25% of it can be used for non-payroll costs, rent, utilities. You can't go over that. And then the forgiveness formula is all based on keeping those employees. So if you kept the staff, you could get that 25% rent, utilities, payroll for the 8 weeks entirely forgiven.
Right. And you're not going to qualify for it unless you have payroll.
To begin with, right.
Yeah, we have a lot of clients that call and we start talking a lot about PPP, and then I kind of back up for a second and go, you have no payroll. So yeah.
But also.
That's great. Great. Thanks for answering that. And just a reminder, if to the participants is, if you guys are raising your hand to get a question asked, just throw that into the Q&A box and we'll get it addressed. Or we're also going to have some time at the end for just a broad Q&A. I do have another question here that I'm going to throw out to the group here. It says, how should a business document or otherwise explain its need for the EIDL loan? The phrase substantial economic injury is very subjective. What criteria will the SBA look for to ensure someone is qualified for this? In addition, what are the guidelines for requesting a loan amount? The PPP loan is 2.5 times average monthly payroll, but no such practical maximum exists for the EIDL except the program max of $2 million.
Right. So what we know about the EIDL loan is that it doesn't even ask you for an amount when you fill out the application of what you want on that. But what I have been told is that they're looking at your 12-month burn rate. So they're looking at what are your fixed costs to keep your business going for 12 months. That's what they're potentially willing to loan you on that.
Can I throw one quick plug in for ourselves?
Yes, please do.
One of the things that we're doing for clients is if they need help on these loan applications, we are willing to assist them. Basically, I guess our package is you can retain us and we'll give you 3.5 hours of our time, which would apply to both loans, and we're charging $500.
Awesome. Thanks, Jack. One more question that I'll throw out there. It says, have you seen any businesses have health reimbursement arrangements and be able to submit that as a payroll cost? The CARES Act reads as group health insurance, but seems broadly interpreted as any health benefits.
Yeah.
I haven't seen it specifically, but if you're reimbursing, I would put that in as part of the cost.
Kind of like the payroll cost,
Right.
put it in there.
Put it in, let the bank ask for substantiation on those things.
So you're talking basically about medical reimbursement?
Yeah, the question was in regards to.
Yeah, I think it's no, but I would encourage you to let your bank tell you no, because we're not underwriting the loan, they are.
But
Awesome. Great. Thank you, guys.
small companies reimburse for health insurance,
Right.
not just
Yeah.
the medical reimbursement. But
Right.
they'll reimburse for some of the health and premiums. And
Yeah.
I would think that should qualify. But again, the banks are going through the formula and they may not allow it when they do it.
Right.
Put it in.
Cool. I'm going to kind of run down this list here. I think Anthony might be answering some of these, but what about if I just started a business in 2020, but because of COVID, I can't make any money?
I didn't mean to laugh. That was rude. That was rude, Cameron.
What options are available
They
to you?
have payroll even in the beginning of this year.
Well, and I don't think we laugh because it's a funny scenario. I think we laugh because it's very common. There's a lot of people that started new businesses, and some of the EIDL loan too, I don't know for sure, but it was kind of okay for startup businesses to go ahead and apply for this.
Right.
And so it's encouraged to go ahead and apply. We've said this multiple times over our Zoom meetings. This EIDL loan is not a revenue replacement. This is to cover costs. And I was just working with somebody yesterday, as a matter of fact, that has a bunch of costs because they're ramping up, ready to go. And they can prove that. They've got their startup costs. They've got their financial statements showing that they've got all the startup business going on. They have contracts showing income was going to happen here in the near future. And then, this hit, and now everything's on hold. I would encourage them to go ahead and apply, because the idle loan is to help you cover costs through this time period and not a revenue replacement. And it's going to be a different, and I don't know if I fully answered the question before, it's going to be a different process on the idle loan. You're getting assigned to a loan officer. It's going to go through underwriting. It's a regular loan. They're going to pull your credit. They're going to look at ability to repay. So the thing with the idle loan is you've got to be able to repay this, or they have to think that, whereas the PPP is very different. You don't have to have any income. You don't have to have any credit. Those aren't qualifying things for this. The idle loan is a little bit different as far as, so we don't know, because we haven't heard back on any of these yet. They're supposedly, the word we heard was they're going to be very generous with this and they want to get this money out, but you're still going to have a loan officer, just similar if you've ever gotten a business loan or a home loan, where they're going to come back and go, I need a P&L, I need this, I need to verify that. So there's going to be a lot more than just putting in the little bit of information on the website to just get your name on the list.
Now, when I applied for that loan, they have my address, they have my phone number and my email. Do you know what form of communication they're going to use? Because now I'm answering all these unknown callers on my cell phone, thinking it might be the SBA, but it's.
It depends on the day. I've heard both. I mean, because we've had clients, our clients have been really great as far as communicating to us about what's happening at all the different banks, what's happening when they call the SBA. So we're getting a lot of our information back from our clients, but I've heard both. I've heard people tell me they've called the SBA and they go, we're going to call you. I've heard them say, we're going to email you. We're not calling anymore. Now we're emailing. I mean, I don't think they know what they're doing over there. Yeah. So keep answering your phone, Anthony, because you never know.
Great, guys. Thanks. And I got another question here in the chat box. It says, this is Angel over at Dr. Holcomb's office. We previously had 80 employees and now only have 30 working, with the rest on unemployment due to layoffs. Does the loan require us to hire back all the remaining 50 employees if there is not work for them, or is the loan simply based on the 30 working employees at the time to maintain those employees?
But also,
yeah,
I was going to say the issue there, though, has to do with the forgiveness part. So, right, if you could, and we didn't really mention this, but let's just use that as an example. So you didn't hire them all back. So now when it comes time with forgiveness, maybe you won't get it all forgiven. However, the default status is that it still is another loan, right? If it doesn't get forgiven,
Right.
it still becomes an SBA loan for now it's 2 years or 1%.
Right.
So it may not be as good as getting all your money back or getting it all forgiven, but it's
a pretty good deal.
It's still
as far
a pretty
as
good
loan.
deal.
Yeah.
Right,
Yeah.
and the amount is based on the 80 that you had. That's the
Right.
max that you could get if you
Right.
had them last year. But the max you could get forgiven is the number that you have employed
Correct.
when it's funded. So that's kind of what we're saying. The rest of it that's not forgiven, you do have 6 months deferred payments, 2 years to pay back, and 1% interest rate. So it could be still a pretty good deal for the
Right.
business.
I tell you, Angel, like what I've been telling everybody, and I think you guys have as well, is apply.
Yeah.
Right? There's some unknowns here. We're going to be in the middle of a recession, and I read in the paper today the IMF's saying this could be as bad as 1930. Nobody knows for sure, but cash is going to be king. If you can have that liquidity, if you don't need it, then pay it back. But I'm encouraging everybody to apply.
I've got a question here. It says, if I already have an SBA loan, will that help me with getting the loans? And then also I'll add, what would be any implications of the previous SBA loan? Do they continue to pay on that? Are they?
One thing that is pretty good, if you haven't heard about it yet, that was in the bill, like the third component, I talked about the 2 loans, is existing SBA loans are not deferred for 6 months, but the SBA is actually going to make your payment on those existing loans for 6 months. So anyone that has an existing 504-7A, you know, we just bought a new building. They're making your payment for 6 months on it. So,
Great.
yeah, it should, but so that part of it shouldn't be a qualifying factor whether you do or do not get this PPP or anything. I do know from talking to a banker when they're doing your application, it does pull up that you have one. Obviously, if you've defaulted on one recently, that's going to be a problem for you. But having another SBA loan isn't a problem. And if you have one and you haven't been in contact, whoever you make the payments to, you shouldn't be making those payments right now. They're kind of on a break for 6 months.
Normally, when you have debt forgiven, you get a beautiful 1099-C, and you have to report it as income. What about what we're talking about here?
Nope.
No, it's specifically excluded from income. But
Another reason to apply.
you're not going to deduct the cost that you got the money to pay.
Right.
You can feel that.
Another question popped up. It says, can you please answer the applying for the unemployment claim from myself if I am an employee of my S Corp?
Yes,
Yes,
you should.
you should.
Yep.
Only if you've been on payroll too. Now, as Jack was saying earlier, I got a bunch of my S Corps coming in going, oh, I'm gonna apply for unemployment. They're like, they're denying me. They say I don't have anything paid in. I'm like, did you ever give yourself a W-2? Well, no, I took distributions. You're not gonna get anything. You can apply, but you're not gonna get covered.
Those are the people that we see are kind of in a bad spot right now.
Yeah.
S Corp owners that have not been taking any payroll because they don't qualify for any of the payroll related relief. They're kind of stuck with a disaster loan as being their option.
I think a client I talked to yesterday called himself the perfect storm.
Yeah.
Where his S Corp receives the 1099, so he can't even say he's like a 1099 person because it goes into the S Corp. He hadn't been taking salary, so there's just, yeah, he's got nothing but the idle loan to try for.
One thing I've heard a little bit about is that an employer can pay up to a little bit over $5,000 against one of the employee's student loans.
Yes.
Tell me about that. That's very intriguing.
Well, I mean, and I came across that this week. There's a couple other little things like in the law that we haven't really come out because there's these big things. And that was one of the little things that I realized this week on that. I'm still having trouble finding employers that are going to want to, in this time and age, kind of go above and beyond and pay that. So I don't know how useful it's going to be, but it is a great feature that you can do that.
Well, I will tell you how useful it's going to be. I have 2 kids that are on payroll.
Yeah, so that would be.
And they have them student loans. This would be a way for, in essence, we could deduct that 10 grand and the kids don't have to pay it as income.
Yeah, I mean, the one client that I was talking to about it is S Corp doctor that's still got a lot of big student loans, so we can do that with some of his compensation to himself. So.
Oh, another one. Okay. I hope you're hearing that, Esther.
We've got a bunch of questions surrounding kind of accessing your retirement funds. Can you guys touch on how some of those provisions have changed under the CARES Act?
Some great changes there. You're allowed to borrow $100,000, up to $100,000 out of your retirement. You don't have to pay it back. If you don't pay it back, it will become income, but you have 3 years to put it back in there. It's just, as you were saying before, a way to get some liquidity right now. And then if you don't get it paid back, you'll bring it in as income, I believe, over 3 years.
And also, there's no penalty either.
Yeah, you don't pay the 10% penalty for an early withdrawal, and you don't pay the taxes on it. So it's a way to access some cash right now.
Is that something that has to be done by the end of this year? Do you know?
Yes, I believe it's March 27th to December 31st withdrawals. Can't count for that.
Okay, when you take that out, like of your 401k, do you take it out as a loan or as a withdrawal?
The loan.
And the wording is going to be a little bit different.
Yeah.
It is a loan, but I don't believe it's like the old loans that you would generally take out of a 401k. You don't have to pay it back with interest. I don't know how your administrators are going to actually report that, but it is a loan. It's not a distribution.
Okay. Now, I know we can take loans from 401ks. We can't take loans from an IRA.
Right. And the 401ks were limited, but now it's up to 100,000 if you have 100,000.
And either
Okay, if somebody has an IRA, how does this relate to them?
It's the same. They're allowed to borrow against an IRA, which hasn't been the case in the past. So they too can take out up to $100,000.
Now, what about a 403B or 401A? Does that still apply?
Ones, I believe you can. I haven't seen that exactly, but I believe you could.
Now,
Here, the thing is they want people to be able to use access to money. And so I would think, again, I don't think we're sure, but it would seem logical that you could do that.
And then they have suspended the required minimum distributions for this year also.
you know, now there is some triggering events that allow you to take that $100,000, right? It's not just open to anybody.
I think it's open.
pretty much,
advertising.
yeah.
That's right.
I believe they have to have a Corona. I think there's a couple of rules. They either need to have had the Corona or a family member, or they've had to have.
No, but I think that's financial need.
I didn't see that.
Financial need.
I knew there was something I didn't address, Cameron, when you asked me the question a while ago about like, am I affected for the EIDL loan? My understanding, because at first I was telling people would call and say, we're okay right now. And I was thinking people weren't qualified for this PPP initially. And then we received guidance that basically the concept is just the uncertainty of the economic environment means you're impacted. So even if you can't, like there are some other rules for some of these other things, you have to be down 50%, blah, blah, blah. It's not like that. It's just basically we're all affected. So I'm not certain, but it might be the same case with those.
Yeah, I think
it does. It is with the loans that we're all considered affected.
Right, because here's the other thing, which ties into what Lisa was just saying. How many times do we hear from our clients, well, we're really doing okay today?
But we don't know what's gonna happen in a month or two
But the
or
whole
three.
point of this is, right, since these programs are open now, you don't know what it's gonna be like 6 months from now. What if you're fully employed today and you have this pension plan, but 6 months from now you get laid off? Well, yeah, you're gonna need the money.
The language that I'm reading says adverse financial consequences as a result of being quarantined, furloughed, laid off, or suffering reduced working hours, or unable to work because of childcare. So I think it's pretty broad.
Yeah.
You just have to show that you were injured in some way. I
Or
don't
that you
think
could
they're
be
gonna-
injured, right.
Yeah, they're gonna be asking.
Yeah.
for
Some way to
money.
be affected, and I can't think of anyone that hasn't been affected.
Yeah, exactly. Yeah, thanks for pulling that up, Kay. And then we've got a question along these lines. It says, for a married couple, can each individual take 100,000, or is it a combined 100? Anthony,
100,000 in it for each.
Right.
each of 200,000 for a married couple. And then here's a question for Anthony. What are you advising your clients to do in terms of taking? Should we take the $100,000 or not? I don't know if we want to save that or.
Going back to the first question, people's retirement accounts are individual. So you don't have joint retirement accounts. So each of them had 401ks, then each of them will be eligible to take it out. And as far as recommendation is concerned, I mean, I don't know, I look at it like free money, to be honest with you, a free loan.
I think it's individual, like you'd have to advise your clients, because
Right.
I'm like, there's some other things, there's some rules about payroll tax deferrals, and I'm really cautious to tell people to do that because
You gotta pay it back.
you gotta pay it back, and if you're having trouble paying it right now, it's kind of like you're just ramping up the debt and you may have problems meeting it. So, I mean, I think the same thing, some of these things are so individual, you gotta look at your individual situation if it makes sense, because, if you can't eat, I think it's a no-brainer,
Yeah.
you're gonna take money out of your retirement, but just like, I want some money, I don't know if
That's
that's.
a good point. So if you take the
Yeah.
100,000 out and you go out and the casinos open up and you go gamble it, well, 3 years from now, you're gonna have to pay the piper. I mean,
Right.
so.
There's a lot of factors, and you
Yeah.
guys are probably even better at making some of those suggestions than us.
Yeah.
But, what age are you at? What's going on? There's so many factors, I think, before you take that out, because I have never really recommended borrowing money from your retirement in the past. But in these days and age, there may be some reasons where you should.
Let me just change the facts a little bit though, and I've gotten this question. Say somebody is already over the 59 and a half, and now their income is cut dramatically. Even before the coronavirus, there might have been strategy in starting to take the money out of your plan a little at a time, because you're gonna be in a lower bracket. So maybe someone in that situation really doesn't care to borrow the money anyway, as a plan. Maybe they just want to start to take distributions, pay the tax now.
Right.
Because they're a lower bracket.
But again, there's somebody involved, because if that's the case, you may want to be rolling traditional IRAs into Roth IRAs or
Great
something like that.
example, yeah.
So it's really hard to make one general observation and say, this is the way everyone should do it.
Yeah. We'll be creating some more content specifically addressing the pros and cons of taking the money out. But a couple of highlights: if you need the money, then you need the money. Like, we need to pay our bills, we need to eat. But if that's a situation, then maybe you need to start putting some money outside of your 401k, because there's going to be, life's going to happen, and we can't have all of our money locked up. So when we need it, when life happens, we have to pay taxes and penalties. Based on what these rules are, where you're avoiding the 10% penalty, you don't have to pay the tax for 3 years, and then you can actually pay it over an additional 2 years. If you were already considering taking money out of your IRA or 401k, it's been locked up. You couldn't take it out of your 401k. But if you were already at that point, I don't think there's ever been a better time if you wanted to take it out than now. And just a little tidbit, one thing we're going to put together is, if you do take it out, you have to account for that taxes, because you have $100 grand. The $100 grand's not yours. There is a lien on it that you owe the IRS. If you take it out, you need to plan to eventually pay the IRS. One thing we're putting together is, what if you took that money and bought an asset, and over the next 3 years, you take that cash flow from that asset to pay the taxes? But we will have some more content on there, but I will say that it is a very individual decision, which we will be going over later.
Don't forget, Anthony, also, if they need to take that money out to pay their CPA, that's really.
Or a prepay.
Or a prepay, that's right, that's right. So we would strongly encourage people, if you need to pay your CPA, okay, it's us, okay. If you need to pay us and you need the money, we strongly encourage you to take the money.
We touched on this, 401ks, IRAs, and other plans. This one also says, does this apply to a TSP? What are your thoughts there?
For savings plans, like government employees participate in savings plans.
I believe it would, as long as there's individual accounts in there, like a 401k, I believe that it would qualify there.
One thing, we've had some clients say that when they contacted their HR and they said no. Is
Well,
there
it's possible that these HR people don't know? I mean, this is brand new. I mean, it's what, 3 weeks old? So I'm sure that's going to change.
Yeah, I don't know. It says section 457 plans. I don't know if that's what a TSP is.
No.
So are these plans required to allow these distributions, or is it still up to the plan administrator?
I think they are going to be required to, but as Jack was saying, this stuff is all new, and a lot of those plan administrators are probably still trying to figure out how to account for it, what verification you have to send in to them to get it.
Right.
So there's probably a lot of them that are not up to speed on this yet.
Yeah.
Awesome. Thanks, guys. I've got a question here to kind of jump back to the PPP question. It says, we've not been successful applying for the PPP loan. We've tried a few times and keep getting booted out and told to start over. Our business bank, Wells Fargo, is not processing any more loans. Do you have any connections for your clients to get a loan in process for us? Any suggestions there? Keep trying. What do you guys think?
Yeah, well, it's not on there. If they email us, we can send a list of online lenders and banks that are taking non-clients. We've recently started using lendio.com. I actually had another CPA tell me they were running a lot of their clients through there. It's kind of an interesting concept. I put one on yesterday. It was very smooth as far as uploading it, and then they source it out to various banks that they work with. But we have a whole list of options that we can email you to.
Great, perfect. That'd be excellent. And I'll throw a plug in there for Gina Bon Jovi. She has compiled a list of banks and whether they're taking non-client applications as well. And so I can add that into the notes as well later. So thanks, guys.
Yeah, we had a lot of unhappy Wells Fargo clients.
Okay. One thing we're going to take, we got a couple more questions before you wrap up. But one thing, what we just want to explain that we've now created our own ebook called Financial Planning Has Failed. And you can register that at Infinite Wealth Consultants / I get them confused, prosperity. In there, you're going to get the ebook. There's going to be a lot of resources that explain alternatives to typical financial planning, and as well as we have about a 15 email sequence of other concepts and other ways to create some income outside of Wall Street.
No, we're good there.
Okay. Is there any help for landlords?
I would think that,
The idle loan.
yeah, I mean, if you have real estate and people aren't paying your rent, I would think you would definitely be in need of a disaster loan.
But again, it's based on expenses, not revenue.
Right.
So it would be to replace your expenses that you have as a landlord, not looking at replacing your income.
None of these things are, provide for profit. It's all to
Correct.
cover costs, whether it's
Yeah.
payroll or these other costs.
So let's just say you had a rental property, you had a mortgage, you had mortgage payment, HOA
insurance.
taxes, and now you're not
Yeah.
getting any rent. That would seem like you would be able to apply for the disaster loan.
Yeah.
So I would assume if you had your property inside an LLC, that the LLC would apply. What if it's owned individually?
Then you could apply as an individual.
Okay, perfect. And they can apply for that at the link through the SBA, or do they do that through the bank?
SBA, right?
SBA.
Okay. We are going to create a page that is going to have, there's a lot of things that are changing. I remember seeing you guys the first Saturday that you did, and then we did it one way, and now things are changing. So we're going to create a page that's going to have links. There's going to be links to their website and some of their content talking about the CARE Act. We'll have a link to the SBA loans. And how you can apply, and then any other content that we have that's relating to the situation, we're going to go ahead and put that on this page. What else we got?
We got one that came along the same lines. I don't know if it's before your question, but it says, what about landlords who own small apartment building and the tenants can't pay and the loan is a Fannie Mae backed loan?
There are rules, I know I saw something come out about government-backed mortgages, that I don't know all the details
Deferring
of
it, yeah, I would look on the Fannie Mae website,
There is something.
because I think there might be some relief or deferment of that, but I'm not 100% sure.
And again, they should apply for the idle loan.
Another one along the PPP, it says, has anyone seen any of the loan docs from companies that have gotten a PPP loan and received the money? And has anyone been able to review those documents?
I haven't actually looked
Not
at docs,
documented.
we have had just a handful that have gotten,
Yeah,
but
no,
I haven't looked at
Just
the
funded
docs.
today, yeah.
Awesome. And same thing, PPP question, anything about profit and loss in determining having to pay back or grant? We may have covered that earlier.
It's not based on profit or loss. The forgiveness is going to be based on you maintaining your employees.
I think,
So if you have the same number of employees in this 8-week period from the time funding compared to last year, you will probably get 100% of it forgiven. But if you don't, a percentage of it still can be forgiven.
But I would
But-
still have your financials ready. I had
Some banks won't.
some banks, because a lot, like the Wells Fargo, not that it was their fault or anything, you know, your local Wells Fargo banker, don't blame them, it wasn't their fault, this was way up here. But these people that have been going to these online banks, not Glenview, I didn't see it happen there, but I had another one out of Florida, like just an online bank, And they did require a little bit extra information, because they weren't clients of theirs. They were asking for
Oh,
driver's
copy.
license,
Yeah.
copy front and back, color copy of your driver's license. They were asking for financial statements.
And we've had them ask, but the
But it
amount of the
shouldn't come
loan
into it.
or the forgiveness is not based on your profit and loss.
Except if you're a sole proprietor under the payroll loan, you had to have a profit. So if you had a loss, and say you're a sole proprietor and you lost money in 2019, I don't know,
You want unemployment.
you want
Yeah,
unemployment or you
unemployment.
need the disaster loan, but the payroll loan ain't gonna help you
Right.
because, dividing your loss by 12 don't help you.
Now, a follow-up question on reimbursing the student loans. Is that eligible for an S Corp as well, or does it need to be a C Corp?
I'm not certain, but I imagine it would be either way.
But I think the difference though is whether you're reimbursing for an employee or for yourself. Because if you're an S corporation and you're more than a 2% owner, those benefits don't work for you.
Yeah, I bet that you might have a problem.
You might have a problem
You
there,
can't
but
say. That's something I'm gonna look up. though.
right, no different than technically you can't deduct the health insurance for an S corporation's owner's portion of the health insurance, okay? So, yeah, I think if you have employees, because I think years ago I researched this.
And that may even be a problem with that example you brought up. You have 2 children.
I don't know how
on
that's gonna
payroll.
work, yeah.
If you're an S corporation, that may,
And that's right,
That may
because
be
you
a
know what, the
problem.
rules of attribution may apply, so your children don't directly own the 2%, but indirectly they do because the rules of attribution apply. So you're right, that could be a problem if it's just a
great,
kid.
great questions.
Yeah.
We're
I
gonna
never
look
thought of
up,
that
we're
one.
gonna go look up things after this.
That's right.
Come back at 2 and ask me that.
Yeah.
Okay, perfect.
Great. Let me jump in here real quick before we address. We've got a lot of questions around kind of that 401k withdrawal that came in as we were addressing it. And a lot of them are, should I not take this money out? And if so, where should I put it? And so again,
Send it
please-
to us. I thought we covered that already.
Put it in my-
Pay your CPA.
we did.
Pay your CPA, right?
And so a lot of that decision is kind of independent. If anybody has questions, obviously we're going to have some content out next week, but you can call us, you can call the accounting firm and address it on an individual level.
Okay, what if, let's say somebody has their operating company that has payroll, and they also own their land through a separate LLC? What can that separate LLC have access to?
It would be a rental one, so you could go to the disaster loan.
Perfect, perfect.
Right, it's very common for people to own the building in a separate LLC. They rent it, say they're a doctor and they rent it to the practice. Well, the LLC that owns the property is eligible for a disaster loan as well, right? I wonder.
We haven't seen anything that say those self-rental rules.
Yeah.
This one says here, what if you have multiple businesses and in fact, you're doing well? Would you, I'm sorry if I screwed that up. If you have multiple businesses and you haven't had much of an impact, would you use any of these programs anyways? Do you have to use the money for that specific business only? So I think the question is in regards to what if I have multiple businesses?
Loans, I think it works well for those that haven't had to lay off their employees because
Yeah.
the forgiveness is based on you retaining your employees. So go apply for them. I still say apply for both loans. The PPP one, if you still have your same employees, there's a good chance that's going to get forgiven. You don't have to pay it back. So why not do it?
Right, as long as, and you do need to use it for the,
Yeah.
Yeah,
You have to
and
And
take
I
the
think that's
payroll.
one thing too, that we haven't gotten the guidance on what's gonna happen on the back end. There's
Right.
gonna be a reconciliation process at the end that will have to happen.
But to Gary's point though, it would seem as though these laws tend to favor businesses that really haven't suffered because they still have the employees.
Yeah.
The businesses that
And they
really
want you to
suffered.
keep them.
and they want you to
Right.
keep it.
So a great example would
Or
be
bring it back.
restaurants, for example, where you had to close altogether. Well, now, the only way you're gonna get the loan forgiven is you have to hire these people back. But if the restaurant's not allowed to open, what are you gonna do? Pay them to sit home? I
Yeah.
mean, you're kind of caught between a rock and a hard spot here. So if you're already a business that really hasn't been impacted, and you still have employees, this works out perfectly. The payroll loan.
Yeah, I kind of view it, it's like a no-brainer to apply for the PPP. And so if you're doing well now, that's great. There's no guarantee how long that's going to last. So I think we're on the same page to apply. Like what I used to say when somebody has a computer problem, like when in doubt, reboot. And, right, that fixes 90% of the problems. Right now, when in doubt, apply.
Yeah.
Yeah.
I think that's better. Because that's about everything we have as far as the questions for us. Again, I will redirect you guys back to Campbell Jones and Cohen for their webinar here in about an hour. That's going to start.
Remember the Campbell.
Could be another firm with a similar name. They'll be calling the wrong firm. You know, I won't be there, and you know.
But honestly, look on our website, YourNevadaCPA.com. We have a lot of resources these people have put up.
Again, to
Use them.
one quick thing, we are going to be back at 2 for our own Zoom meeting for more questions. If your listeners and viewers haven't had enough, and we are offering to provide assistance for those who do need help in the loans.
What are you going to be covering at your webinar coming up here?
It's going to be strictly Q&A.
Q&A.
Yeah, we've been doing these every week, so we've kind of been providing the new information. I imagine this week we're going to get a lot of questions about what's happened this week as far as the PPP program rolled out. We'll probably also talk about the new stuff the IRS came out with, deadlines and extensions like that. But we're really just trying to field whatever questions our clients have.
Okay, so possible for somebody, if they want to stay current on your additional webinars and what you guys are doing, do you guys is there a way they can opt in to receive emails on updates?
Yeah, if they go to our website and subscribe to our newsletter, they'll automatically be on our email list, and so they'll get the information. And we've really been trying to, as we get more information, kind of do a lot of email, but we try not to be too annoying with them. But recently we've been doing a lot of email blasts, trying to keep everyone aware of what's going on. Because surprisingly, even with that, I mean, we're having clients call up now going, what's this EIDL loan? So some people are still just now kind of figuring out what's going on. So.
Okay, awesome. Any more questions?
No, we're good. Just closing up here.
Okay. Man, we really want to thank you guys in part for taking the time to be on our Q&A, but also all the Q&As that you guys are doing. You guys, there's a lot of misinformation and a lot of need out there, and you guys are doing a great job filling the gaps of the questions, but then also having the ability to help them through this process, to help them fill out some of this paperwork and kind of see this to the end. So we thank you guys.
You're welcome.
Thank you.
Thank you.
Awesome. Thanks, guys. Really appreciate your time.
Okay.
Thank you.
All right, have a great day.
Take care.